everyone, welcome to the Ichimoku charts.com daily analysis for gold for Wednesday, September 5th, 2012. Well, a continuation of the trend to the upside today, and the candle that we're examining is the second last candle here. The final candle on this chart is currently still developing. It's quite well developed, but we can't analyse that yet because the market hasn't finished trading, but there is some significant features of that we might just have a quick look at. Before today's trading, if we look here at the current candle here, it's a small black body candle. Fairly significant that we have a small black body candle for this first time frame uptrend that the market was in. We had a series of three white body candles. That's significant to this market. It's the colour of the candles that you like to see as a market's in an uptrend, and it means that the buyers were making net bullish progress as the trend was continuing to the upside. But as the market tested up to the round number resistance at 1700, we did have the size of the bodies of the candles become smaller. It's little wonder, however, because we had such a large rush of enthusiasm from the buyers with this very, very bullish large white body candle. And for the previous day's trading, we did have a slight extension of the size of the body, and it did suggest that there was potential for the market to trade higher. But we did see the buyers lose commitment up above the round number resistance at 1700. For today's trading, however, we've seen a black body candle, and that suggests that the sellers have actually closed this market with some downside momentum for the day between the open and the close, and it does suggest that there is potential for lower levels, and there has been a change in the short-term dynamics of this market. We do have a large shadow on the bottom of this candle, however, and that could be significant, and it does suggest that the sellers, even though they have had a change of momentum throughout the trading day, they have lacked the commitment to trade the market down below the 1690 level and close below there. They had the strength to trade the market down there but lost commitment. With the buyers closing with control of this for this candle for today, for the market for today, by closing up above the midpoint level and between the midpoint level and the high. So it's a fairly strong amount of control as well. In terms of candlesticks, however, this is a potential Japanese candlestick reversal pattern. It's a harami pattern, and that's where we have a prior uptrend in place. We have the white body candle and then the small black body candle, where the body of the current candle is within the body of the previous candle. It does suggest there is potential for a change of trend. Now, having said that, the potential for a change of trend is what it says. It's potential and it's not confirmation. We do require confirmation of a change of trend to the downside, and that would be a candle with a lower high and a lower low. And let's look at this current candle as it's developing. There isn't any sign at the moment that that's going to happen. This candle, even as we've been watching this and I've been recording this analysis, has tested up to the 1700 number with a white body candle with the buyers very strongly in control. We've already taken out the high of this candle, of today's candle, and it doesn't suggest that the sellers are in control at the moment. Now, that could change. There still is a lot of the trading day to develop, but at the moment it certainly won't be confirmation of that change of trend, because if we do take out the low of this current of the candle of the today's trading that we're analysing, we would have in bar chart terms an outside day. That would be a day of indecision as well, and would set the market up for a potential change of trend. But the candlestick reversal pattern, the harami pattern, is already negated by the failure of the market to trade at a lower high and a lower low. But the certainly the ramifications of that are important. Just the fact that there was a potential candlestick reversal pattern is important, and it does suggest that there may be a change of trend, but certainly not in the well-defined way that we'd like to see confirmation of that harami reversal pattern. The important feature here, however, is one that I've mentioned, and it does raise doubt about that change of trend, is the fact that for the previous 3 days we've seen large shadow on the bottom of these candles develop around the 1690 level, and that does suggest that there is very strong support down around the 1690 level, and suggests that the market could certainly trade to higher levels and above the 1700 level, as we are testing to at the moment. Now, if we do trade above there in a very bullish way, we do have a large zone of resistance, and that's from quite some time ago, where we saw the market finding very strong support down around here in February this year, finding very strong support within this zone. We see the large shadows on these candles, and then that support turned into resistance for this market previously around early March, and there is potential for this zone to act as resistance once again, and it is quite a large zone. It extends all the way up to 1730 roughly. But obviously the round number here that we're trading at the moment, we had rejection from there previously, is the most important factor in this market in the short term. Now, just looking at the Fibonacci extension, we're looking at the relationship of the first time frame uptrend that the market's in to the prior time the market was trending up. And here we see price rejection from that 61.8% level that coincides with that 1700 level. It's actually at 1701. And we saw for the previous 3 days the market testing around there, and we saw a lot of indecisive candles with shadows on the top and the bottom, and then even that potential Harami reversal pattern. So we are at an important juncture here, 61.8%. That does suggest that there is potential for a change of trend to the downside as well. And the way that this candle is developing, it's testing once again to that 61.8% level. If we see rejection from there, then there is a strong likelihood of the market testing down to lower levels, and perhaps testing down to a level through this very large white-bodied candle. Also, in terms of the Fibonacci retracement, and we're looking at the relationship of the current first time frame uptrend to the prior time the market was trending down, and here we've seen an expansion through the 100% level and the test to the 161.8% level. So around this level, near the 1700 area of resistance, the round number, we have this confluence of resistance based on 2 of the Fibonacci techniques and the round number resistance. So that is a very, very important level for this market moving forward. If we do see a bullish close up above 1700, then that would be a very, very significant break for this market, and we could see the market testing to higher levels fairly quickly. Now, in terms of Ichimoku, we have a bullish market in all 3 timeframes by trading above the cloud. So we're bullish in the long-term timeframe by trading above the cloud. We're bullish in the medium-term timeframe by trading above the Kijun-sen. That's the pink line here. And if we look at the Kijun-sen, that's actually pointing flat, and when that points flat, there's a good likelihood of the market retracing back towards that flat line. So we need to be aware of that. And also we're trading above the Tenkan-sen, the green line here, so we have a bullish market in the short-term time frame. And all of those time frames are confirmed by the Chica span, which is trading above the corresponding price action here. So a very, very bullish market in all 3 time frames, but very, very strong resistance overhead. Strong close by support now down around the 1690 level. And the market is set up for a potential change of trend. At the moment, the way that it's developing, it looks as though we may not have confirmation of that change of trend. We are testing to 1700. If we do trade above there in a bullish manner, then we do have a strong area of resistance within the zone extending all the way up to 1730. We do need to wait and see how this market develops over this next trading day. But if we do see the market sell off from where we are trading at, and even close down below 1690, there would be a good possibility that we could be trading down at least to the minor support level around the 1680 level, or even down to the Tenkan-sen trading around the 1674 level.